Again, what we're emphasizing here is for people who are exploring this process, we want to prepare you in advance for some of the things that you may encounter that primarily involve the human condition. And the human condition that Sarbloh is talking about is using it or losing it, because the enthusiasm, the initial enthusiasm is going to fade. It will. We share with clients very transparently, like, this can be incredibly boring. We want you to know that. But that's what it's meant to be. It's not meant to be consuming. It's not meant to consume your life, and that we want you being fanatic about becoming your own banker 24 hours a day. But we need you to stay plugged in to the coaching and mentoring resources that we've created for you so that you can achieve the highest degree of success in the implementation of this process.
For this video, I think one of the things that we should definitely cover is, as someone embraces the process of becoming a banker, where can they derail themselves on the process?
Okay.
And a few clients who we have to reel them back in on the process. And this video is going to be good. So if you're thinking about implementing the process of becoming a banker, make sure that you watch this video so that you continue to scale the process of becoming a banker and don't derail yourself unknowingly going forward. So maybe we can discuss a few points, and I got six points that I want to cover, which is what we see based on the ton of experience that we have in this business, helping so many Canadians, North Americans implement this process in their lives. So first thing first is, again, going back to Nelson Nash's golden rules, he created those golden rules so that when we follow those rules, we will be a good, honest banker going forward, no matter what, right?
Absolutely.
So his first golden rule is, don't be afraid to capitalize. And sometimes what we see is clients, they get excited about the process of becoming a banker. The quick start, right? They like, I read it, Sarbloh, I'm ready to go, but I want to just get my feet wet.
Yeah.
It's like, okay, then how are you ready to go? Right? If you just want to get your feet wet, which you can do, you can start wherever you want to start. But I'm honestly sharing my own journey, and where I made mistake of getting started is undercapitalizing my own system to begin with. Knowing that I could have done more to get started, I did not capitalize it. So I was my biggest obstacle for my first policy. It's not that it's a bad policy, it's a great policy. I've done so much from that policy. I just wish the number was bigger. Again, we can only look back and see what worked well and what didn't work well. So we were sharing this from our own experience. Like, number one reason why most people don't do so well in implementation of the process of becoming a banker is they undercapitalize. So Nelson Nash's first golden rule is, don't be afraid to capitalize.
Can I expand on that?
Absolutely.
So here's something that comes up as people are just getting their feet wet, as you've coined that phrase. So people will ask the question, how soon can I stop paying the premium? We just walked through an example on a completely separate client coaching video, which lives in our client portal, which our clients have password protected access to, that has a treasure trove of coaching, mentoring resources, which is really unparalleled in North America. I can say that confidently. What we just reviewed was a policy where the policy owner paid a premium of $35,000 and the annual increase in total cash value was more than $45,000. I would bring everybody back to Nelson's book, because in the equipment financing example, which the first illustration for that is on page 59 of Nelson's book, this is such a critical teaching point based on what you just shared. And I want to let's first and foremost go to page 59.
And by the way, if you haven't had an opportunity to read Nelson's book, link is underneath the video description. Get yourself a copy of the book. You'll be glad that you did.
There you go. Thank you. And it's a 92-page read. It will open your eyes to a whole new financial world. If I was to look at page 59, you can see that this is where Nelson begins to describe the process of becoming your own banker, where he's got a logging truck that's being run through the policy. His nephew is controlling the financing function of that logging truck. If I was to go back to the original illustration, which showed no loan activity at all, this original loan illustration is on page 54. Nelson is showing the premium going into the policy for a cumulative sum of 4 years. He's not showing any additional premium going in. The reason is not because he would encourage you to stop paying the premium. The reason is that he wanted to show you what would happen if the insurance company itself administered this contract for the rest of the days of the life that is insured. He didn't want to show any loan activity because he wanted you to see that the policy owner's behavior is far more critical than the behavior of the insurance company. So this, again, page 54, is not encouraging someone to pay the premium for the least duration of time. Here's what Nelson is describing. Let's go to page 58. And at the bottom of page 58, he says, actually, this interest is not really interest. It is additional premium. Let's just stop right there. It is not really interest. It is additional premium that has been paid into the policy that equals the interest that was being paid to the finance company. So now going to this illustration, when you see additional outlay in the third column here next to the age column, Nelson is showing you that he is continuing to pay the premium. He's not paying in the total that he has the contractual authority to pay in, which is $40,000 a year. Not paying that amount in. He's saying that the interest that he's paying above and beyond what the insurance company calls for is actually going back into the policy as premium payment. Don't be afraid to capitalize. This is a very sharp example of what Nelson means. Don't be afraid to capitalize. And then he goes on to show what happened. What was the net effect of running one logging truck through the policy once every few years? If we go to age 65, the stereotypical retirement age, we've amassed 1.988 million in total cash value, and we've got 3.158 million in total death benefit. This is where the policy owner's behavior was far more important than the insurance company, because the insurance company administering it all on its own, there was only 1.517 million total cash value, and the death benefit was 2.4. So Nelson said, in relation to my first golden rule, don't be afraid to capitalize. Who did better? Who created a better outcome? The life insurance or the policy owner? Well, of course, it was the policy owner. So that is a very good point that you bring up.
Well, number two that I see is, so for example, looking at spouse scenario, husband, wife, and husband is on board, but hasn't shared this with wife, or wife is on board, hasn't shared with husband. So this is where it's critical, because what you're doing is something that's going to stay with you for the rest of your life. It's going to help meet your need for financing for the rest of your life. If both of you are not on board, things can go derail very quickly, and not just derail, it's going to affect the marriage also going forward. I've seen instances of this happening, and we made a decision that if both spouses are not on board, we're not going to work with you guys. It's important to be calibrated as a family, because ultimately it is about the family banking system that we are creating for you guys.
Yes, I love that.
Right?
And that's the key, is that we're really moving clients into embracing the family banking system, which is the infinite banking concept is really an exercise in a person's imagination. And you have to have coaching and mentoring to understand how to develop momentum in implementing it. The family banking system is a whole construct of how to keep the money in the family by equipping the family with the tool necessary to get the job done and the process necessary to get the job done. That family banking system, which we've trademarked, applied for all of our trademarks in Canada and the United States, this is a whole platform, a whole program that clients will evolve into. And it's really easy to do when both spouses are in lockstep on controlling the banking function as it relates to your needs. Couples have had so much bad experience around the topic of finance and the topic of money, because it becomes a function of, I want to do things this way, and my spouse wants to do things that way. We don't really see eye to eye. So we're just going to keep things separate, versus you're both going to need the use of money for the rest of your lifetimes. You're both going to need to finance all those things that you need to purchase throughout the course of your lifetime. Let's bring the family together in the implementation of a process that's going to keep the money in the family. It would be completely illogical not to do that. And when spouses are together in lockstep on that, they just achieve such incredible results. And then it's so much easier to transfer that knowledge to future generations. And that brings us to Nelson's first golden rule, which is to think long range, meaning think 3 generations past your own.
One of the things for us at Ascendant Financial, which is a pretty important core value, is to educate. And there's so much in terms of resources that is available from education standpoint. So there's videos on Banker's Vault, which you can watch. And we have a podcast called Wealth Without Bay Street, which you can hop onto. And there's also a YouTube channel for Wealth Without Bay Street. But there's also a lot of books based on how your spouse learns best. There's plenty of resources. And the question that we get asked all the time is, in a situation where one spouse is on board and the other isn't, they're like, okay, how do I approach my spouse with this? I said, approach your spouse by asking questions, not giving them the answers. Because if you ask questions, you'll get a response, and then you'll see an opportunity to help them rethink their thinking, which you have already gone through the process yourself by educating yourself on why you want to become your own banker. The reason why the
100%.
spouse is not on board is because they don't understand the problem that this is going to solve.
100%. I agree with you wholeheartedly. And that's the key. And that reminds us of what Nelson shared with us so often throughout the years, that unless you understand the problem, the solution just won't matter to you. And so having both spouses have a clear understanding of the problem so that the solution matters and they're working together in the implementation of the process so that it can then be expanded to the extended family through the family banking system. And that whole model that we've created is going to completely transform your family's financial future in a very radical way.
Perfect. So the point number 3 that I have here is, Jayson, knowledge may escape. Here's what I mean. When we get started with a client and it's the first exposure to the process, become your banker, they get really excited. They read books, they read content, they watch content, podcasts, and they're like, yeah, I want to get started. But after that, they just don't go back and revisit the conversation, the discussion. They don't even create time to meet with their coach. They stop attending webinars. They stop attending client coaching sessions. And what happens is with time, knowledge escapes. And the outcome that it creates is they remember what they bought. They don't remember why they bought it. And then this is where they're like, the last time I met with you, Sarbloh, was a year ago. Can you remind me why I'm still doing this? Like, I just put 10,000 into policy. Why am I putting 10,000 in policy?
Right. And thank goodness that's a rare occurrence. Again, what we're emphasizing here is for people who are exploring this process, we want to prepare you in advance for some of the things that you may encounter that primarily involve the human condition. And the human condition that Sarbloh is talking about is using it or losing it, because the enthusiasm, the initial enthusiasm is going to fade. It will. We share with clients very transparently, like, this can be incredibly boring. We want you to know that. But that's what it's meant to be. It's not meant to be consuming. It's not meant to consume your life and that we want you being fanatic about becoming your own banker 24 hours a day. But we need you to stay plugged in to the coaching and mentoring resources that we've created for you so that you can achieve the highest degree of success in the implementation of this process. And Simon Sinek said it best. He wrote the book titled Start With Why. And he said, make sure that your clients are really clear on their why. Reasons why they're implementing this process to begin with. Otherwise, like Sarbloh said, all that they're going to remember is what they purchased from you, not the reasons why they're doing it. And we want our clients to be clear on their why, and we want our clients to have the highest degree of success. And so that's what Sarbloh is preparing you for, to say, understand, like, this human condition can creep up on you. Oh, I don't have time to go to the quarterly client coaching sessions that Ascendant and LifeEva hosts. I don't have time to meet with my advisor because I've got a million other things going on in my life. Well, your advisor is responsible for you, to you, not for you. Did I say for you?
Yes.
Is that what I said?
Yeah.
That's not what I meant. Your coach, for clarity, your coach is responsible to you, not for you. That brings us back to what we're educating people on, which is to truly become your own banker. That's the 2 most important words in the title of this book. There's a reason Nelson wrote it for you. He didn't write the book for professionals in the business like Sarbloh and I. He wrote the book for you because he wants you to become your own banker. That means that you've really got to embrace the opportunity that this represents and not abdicate the responsibility of it to someone else. And we do that in every other aspect of our financial lives. Here's my money, put it into mutual funds. I'm abdicating the responsibility to you, Mr. Broker. Here's my money, go do something better with it. I'm abdicating the responsibility to you, Mr. or Mrs. Banker. Nelson said, you've got to no longer abdicate the responsibility and, more importantly, the opportunity that it represents to take control of that function. But it's going to take time for you to learn how to do it. There's a difference between getting a membership at a gym and actually working out there. Your trainer's not going to lift the weight for you. Otherwise, you're not going to see any personal improvement. So this is what Sarbloh is really emphasizing to prepare you as you decide to embrace this journey in your life. It's going to require some commitment to grow.
Again, just revisiting Nelson's golden rules. Number 1, think long range. Number 2, don't be afraid to capitalize. So most of the things that I see where clients derail are just based on the first 2 golden rules. That brings me to the 4th point why few clients may derail. The 4th one is over dependency on coaching. That happens a lot. And they don't want to take, as Jayson mentioned, like, as a coach, we're not responsible for you, we're responsible to you. If you are dependent on your coach for everything regarding the process of becoming your banker, then you're not becoming your own banker. And I'm not going to do anything until I meet with my coach. I'm going to ask my coach everything regarding this process, have 100% dependency. No, it's not going to work. You got to walk the talk.
Yeah, you have to take ownership of the process. That's why Nelson named it Becoming Your Own Banker, because he wants you to utilize your imagination and he wants you to receive inspiration to learn new things and to implement this process, truly implement it. The coach will always be there to meet with you and provide you with great counsel and great advice and great guidance. But if you're leaning on the coach to actually do the how for you, then I know at Ascendant, we just wouldn't be well suited to work with you. That's not our coaching model. It never has been. We really create independent clients. And that's for folks who that just doesn't work well for them. And we're just not well suited.
And the fifth point is organically, naturally, life may just happen. Right. And life happens. The immediate reaction that we have in the mind's eye is, okay, let's just cut all our expenses immediately. Let's preserve everything that we have. And then some clients may just end up making a wrong decision of calling the insurance company directly and saying, hey, I want you to just put a stop on my premium, or I want you to just close my policy and give me all the money back. Because when life happens, we're just not in that zone to make the best decision for ourselves because there's so much happening just around us. This is the time where you actually want to depend on your coach, right? The coach should be on your there. The coach should be on 911 when life happens, because there's so many ways to just keep the policy going. You keep your banking system going, keep your money compounding without having to stress about it.
Very good point. Get in touch with your coach, not only when times are great, but especially when you run into financial difficulty that might be temporary or even permanent. Get in touch with your coach right away and say, we need to talk. Your coach will be there to guide you through a variety of options and to help you make the best informed decision about what you need to do to continue to take care of your family, to continue to take care of your business and all of your financial obligations. The coach is really well equipped to help you navigate those difficult, turbulent times. Like Sarbloh said, just call upon your coach. That's what we're here for.
Life will happen. There's no escaping it, but you'll be glad that you have a system like this to depend upon when life happens. So don't break the system.
Definitely. Rather than cut down the whole tree, if you need to shave a few branches off, that's okay. The tree is still going to survive, but don't cut down that tree, because that tree can never stop growing. Right. It's going to continue growing regardless of what's going on in your life financially. That policy is going to continue growing. So rather than chop it down, if you need to cut off a few branches, that's okay. Your coach can help you do that.
And the sixth point that I have here, Jayson, is on the topic of coaching, is also the reason why the system can derail, or as a client, you can derail yourself, is not getting good coaching guidance. And that's why it's such an important aspect of working with an authorized infinite banking practitioner who practices what they teach and who's had a ton of experience in serving clients for years and decades, and most importantly, someone who's got a support system behind them, like a team, and not a sole entrepreneur or solopreneur, or whatever we want to call that, versus working with a team. Because when you work with an individual who's part of a team, you just don't get that individual, you just get the whole team behind them.
Right. And that's what people give us feedback on all the time, as evidenced by hundreds upon hundreds, and that's no exaggeration, hundreds upon hundreds of real feedback-driven 5-star Google reviews. That's not just a rating. It's people actually describing their experience with us. And we recognize that not everybody's going to implement this with us. There are a lot of great practitioners, all due respect to a wonderful practitioner community. But those who do choose to work with us are making that decision based on, again, all that feedback that we continue to get on a repetitive basis. It's not just my coach, it's the entire team that I get to work with and that I'm supported by. And if you were to look at our Ascendant website, if you were to do a heat map, you would see that Meet Our Team is like the most frequently visited section of our website. And people are telling us, they're saying, I really feel like this is a wonderful group of people. It's not just a one-person show, because one human being only has so much capacity to serve so many people. Whereas with a team, we have the capacity to serve so many more. And we've really assembled an amazing team here. And we're a managing general agency. So advisors are connecting with us from the outside advisor community on a regular basis, wanting to associate themselves with Ascendant, wanting to be licensed here, because we're the only MGA in the country that specializes in the implementation of the process of becoming your own banker, the infinite banking concept. And in the United States, having launched LifeViva in January of this year, that business is already developing amazing momentum. And we're going to grow that company into an IMO in that country. And we'll be attracting a lot of great advisors and practitioners who want to be a part of our team. All right. So in summary, let's rhyme these off. So Nelson Nash's first golden rule is
thinking long range,
meaning think three generations past your own. Second golden rule,
don't be afraid to capitalize,
meaning your money must reside somewhere. What better place to have it reside than here? And then from this very place, you can set about achieving all those other financial objectives that you're working toward, and you get to control how you finance all the things that you need throughout your lifetime. Third golden rule,
don't steal the peas.
Right. Be an honest banker. If you're going to access policy loans, you should have a plan to repay them, because you wouldn't borrow money from someone else's bank and have no plan to repay it, because that plan would have been dictated to you. Whereas in this scenario, you control that. You're the banker. Golden rule number 4.
Don't do business with banks for the purpose of financing.
Big time. And that's not going to happen overnight. That's going to be gradual and incremental over a period of several years. For most people, it'll take a couple of decades. That's the reality. And then the 5th golden rule,
rethink your thinking.
And most importantly, develop your ability to rethink your thinking. And that's where a good coach can help you along. And then the 6th golden rule,
make room for windfalls.
Meaning have a system of policies, implement the family banking system. We can coach you on how to do that. And then as death occurs within the family, that will create tax-free windfalls. And you should have a place within your family banking system of policies to store those future windfalls so that you keep the wealth within the family. Sarbloh, this was awesome. And for all of our viewers on the YouTubes, so there's going to be a link going to show up somewhere, our amazing editing team. Yes, this is a cue for you to put the book somewhere in this pane and give people a link to go and buy it, and we'll ship it right to your front door. Get yourself a copy of Nelson Nash's book titled Becoming Your Own Banker. We sell it for cheaper than Amazon does. You just saw another video playlist show up. Click to the next video that we've recommended for you. Continue your journey of learning. Make the rest of your week outstanding. Thanks, everybody.